In this video, I'm going to tell you about a £200 investment that I made that grew to £30,000. Hi, I'm Simone and this is Simone Invests. Most people think that investing in the stock market is scary or only for people with lots of money. Well, I'm here to share with you my experience of investing in the stock market and to let you know it's really not that bad. So the key for me was to learn about it and start experimenting with small amounts of money until I knew what I was doing. Now, back in 2014, I read a book, Rich Dad Poor Dad by Robert Kiyosaki. Highly recommend it if you haven't read it already. There's a link to the book in my description below. And I decided to invest in the stock market after reading this because I wanted to make my money work for me and not have to work for my money forever. So I opened an account with a well-known broker company called Hargreaves Lansdown, and again there's a link in the description below. And I began investing £100 to £200 at a time on various companies like British Telecom, EasyJet, Vodafone, companies that were familiar to me. So I later sold out of these companies when I began to learn more about the stock market. When you're starting out, the advice is to buy what you know. Well, if I knew then what I knew now, I would have bought companies like McDonald's and Visa, but that's for another video. Anyway, I later invested about £99 for a subscription in a company that gives stock recommendations. They're called Motley Fool. The link is in the description below. So they were a recommendation company, and every month they would send out the names of 2 companies that they thought were a good buy for that month. They would send out financials and the potential that they thought the company had to grow. So they're a company of professional analysts, so they certainly knew what they were talking about, and I figured I could do with the help anyway. They also gave out a list of 10 starter stocks of companies to have in your portfolio to start you off on your investment journey. I actually learned a lot from Motley Fool. I don't use them any longer, but now I know how to do my own investing. Well, one day in 2015, I came across a company called Nvidia. I did some research and found out that they were the #1 company that did graphics cards for laptops. So if you can imagine how many laptops there are in the world, and they made gaming chips for laptops as well. So they were the #1 company for gaming chips, and if you know how big gaming is in the world, that's a hell of a lot of chips. I also remember that I used to see their sticker on my laptop. I've seen their sticker on my laptop and on laptops in the shops. So as well as that, they were into. I found out that they were in the driverless car space as well. So for me, that was a company I thought was worth taking a chance on. So on the 19th of February 2015, I bought 15 shares in Nvidia, costing £221.31. That's £15 a share. I bought that through the brokerage company called Hargreaves Lansdown. I think I mentioned that already. So at that time, you could only buy whole shares and not fractional shares as you can now. So I bought 15 whole shares for the sum of £228.31. The price of those shares have grown, and today I own 31 shares in Nvidia at the price of £730.22 a share. Remember, I bought them at £15 a share. So that's an increase of 19,000%. The shares are worth to £22,578 at this current time. So where else can you get a return like that? Click on like if you've enjoyed the journey so far. So I cashed out £800 a couple of years ago and invested that in crypto, but that's for another video. And last year I cashed out £7,000 and reinvested it into dividend stocks, which pay me out a regular sum every month. If you're wondering how come I've got 31 shares now when I only bought 15 originally, I haven't bought any more shares, not in Hargreaves Lansdown anyway, but Nvidia did what they call a stock split. Now a stock split is exactly that, where they, for every one stock you own, they'll split that into 2, 3, even four shares, as they do with the price. So if they split it in two, you now own double the number of shares, but they're still worth the same amount of money because they've also halved the price. The reason for doing stock splits is to allow other investors to buy into the market at a cheaper price. So I bought another £200 worth of Nvidia last year in my new broker account, which is an ISA stocks and shares account with a company called Trading 212. Trading 212 do not have any charges, whereas Hargreaves Lansdown charge £11.95 per transaction. That's if you buy the shares and if you sell the shares. With 212, there's no fee. That £200 worth of shares has now grown by 168% and still rising. Now, don't get me wrong, I have bought into companies that have gone down in price, but with the likes of Nvidia, Microsoft, Apple, Google, Tesla, Netflix, I am in profit. And I expect the shares to keep growing over time. Now, I don't encourage anyone to rush out and buy shares in Nvidia, Microsoft, Apple anytime soon until you've done your research, until you've learnt a bit more about it. But I'm here to tell you that it's definitely worth it. And if you'd like to learn more about investing in the stock market, stick with me, stay the journey with me. I'll be putting out more videos like this, giving out more information about the stock market, how to buy shares. As I mentioned in my last video, my strategy now is to buy dividend stocks, and I'll talk about that in another video. So thanks for listening, and hopefully see you next time.